Well, joining us for more on the credit insurance cap by Treasury is Lesiba Mashapa from the National Credit Regulator. Have they got it right?
Yes, Alec.
Have they got it right on the cap, the guys from Treasury?
Hello, Alex.
Sorry, Lesiba. Let's try that one again. We've just watched a clip from an official of National Treasury. Are they getting it right with these proposals that they're going to be bringing through?
Good afternoon, Alec, and to the viewers. Indeed, the problem with credit insurance, many of the issues that they have identified in their position paper, we already knew that there are problems in the consumer credit insurance market. And as the National Credit Amendment Act was being debated in Parliament earlier this year, this issue also came up, and eventually Parliament decided that the Minister of Trade and Industry must set a limit on the cost of credit insurance. So in a nutshell, I would say that we agree with the identification of the problems that were highlighted in their paper.
What kind of an impact is it likely to have? Obviously, when you reduce the cost of something, it reduces the profit on it, but the knock-on effect is perhaps it's going to sell less credit, or if the credit insurance is not there, they might sell less product. Is that a likely knock-on?
It is possible that there could be unintended consequences with any regulatory and legislative action that we take. But what is important is to emphasize that in the current market environment, there is a problem of excessive pricing. Let me give you examples. Like you would have an entity that collects more than 300 million in premiums and only pays out less than 30% of that in claims. And again, when you look at that, you see the excessive pricing, and you ask yourself, to what extent is the pricing right? And the other problem is not only to look at the pricing, you also have to look at whether there is enough competition amongst the providers of this product, whether there is any meaningful choice for consumers when they compare the products, and overall the terms and conditions of this product, are they drafted in such a way that they are reasonable and fair to consumers? And in the National Credit Act, we already have mechanisms through which we regulate credit insurance. The only requirement that was to limit the cost of credit. For example, on disclosure, the Act already requires the providers of credit and insurance to disclose the cost of credit in the quotation that must be given to consumers before they enter into credit agreements. And again, there must be a separate form where the cost of credit insurance separately is disclosed, and that form must also be given to consumers.
That's good stuff, Lesiba. Thank you for unpacking that for us. So yet another good step in the right direction to stop profit gouging. The unscrupulous, unfortunately, if they are not checked, they will be at it no matter where you look. Well, that was Lesiba Mashapa from the National Credit Regulator.